A new jobs report just dropped, and honestly, it's painting a pretty concerning picture of the U.S. labor market. So today, we're going to break down what these latest numbers really mean for the economy, for your wallet, and of course, for what the Federal Reserve might do next. Okay, let's dive right in. This explainer is for educational purposes only and is not financial advice. Always do your own research or consult a licensed financial professional. So here's what we've got on tap. We'll start with the latest jobs data itself. Then we'll unpack what it means for unemployment and, your actual wages. From there, we'll take a closer look at the layoffs happening across the country. And finally, we'll tie it all together and ask that big question. What is the Fed going to do about interest rates? All right, let's get straight to the numbers. The big headline, the main takeaway from all this recent data, is that the U.S. labor market is really showing some clear signs of weakening. The data for October 2025 was just brutally bad. It showed the U.S. economy actually lost 105,000 jobs. That is a huge move in the wrong direction, a real red flag for sure. Then, come November, the market bounced back, but just a little bit, adding about 64,000 jobs. Now, this small gain really doesn't wipe away the concern from the month before. Instead, it just kind of paints a picture of a really volatile and uncertain market right now. And when we zoom out and look at the broader trend, a clear pattern starts to emerge. Over the last 6 months, the market has actually lost jobs in 3 of those months. So this isn't just one bad report. It's a pattern suggesting things are really starting to take a turn for the worse. So this brings up a really crucial point. Can we even trust these official numbers? Are they really giving us the full picture of what's happening on the ground? And that's a totally valid concern. Get this, even the chair of the Federal Reserve himself has said he suspects these numbers are being overstated, maybe by as much as 60,000 jobs every single month. That suggests the reality of the labor market could be even weaker than what we're being told. Okay, now let's talk about what all of this actually means for you personally. We're talking about unemployment and that age-old question, is your paycheck keeping up with the cost of living? The unemployment rate has now jumped up to 4.6%. The Fed chair has called this the single most important data point for the labor market, and, seeing it trend upwards like this is not a good sign. And this is where it really hits home for a lot of us. Right now, wages are growing at a rate of about 3.5%. But when you put that next to an inflation rate that's hovering around 6%, you can see there's a major gap. This gap leads to something called a real wage cut. So what does that mean? Well, basically, if you didn't get at least a 6% raise this past year, your money just doesn't buy as much as it used to. Your purchasing power is actually going down. So, with a market that's clearly softening, it's probably no surprise that we're seeing a rise in layoffs. Let's take a closer look at where exactly these job cuts are happening. And wow, the numbers are pretty stunning. Between January and November of 2025, announced job cuts are up 54% compared to the same time last year. That is a massive increase, adding up to over 1.1 million job cuts announced by employers. Looking just at November, you can see the pain is really concentrated in a few key areas. Telecommunications got hit the hardest, followed by the tech sector, which is, still trying to right size after all that pandemic-era hiring. We're also seeing food companies, the services sector, and retail feeling the pinch as consumers start to pull back. So why are all these companies cutting jobs? Well, the main reasons they're giving are things like restructuring and store closings as they try to cut costs. But there's a newer factor that's starting to gain ground: artificial intelligence. As companies adopt AI to automate tasks and boost efficiency, some jobs are just becoming redundant. That led to over 6,000 job cuts in November alone, and nearly 55,000 for the whole year. Okay, so with a weakening job market, all eyes, and I mean all eyes, turn to the Federal Reserve. How is this data going to influence their big decisions on interest rates? So, heading into this jobs report, the market was pricing in about a 24% chance that the Fed would cut interest rates at its January 2026 meeting. A weaker economy usually means the odds of a cut go up. But here's what's so fascinating. After this weak jobs report came out, the odds, they didn't budge, not one bit. They stayed exactly the same. This can mean the market had already priced in this weakness. Basically, investors already expected the bad news, so it didn't really cause a shock. And this whole situation creates a really interesting tension. You've got the Fed's official projection, which is super cautious. They're only forecasting one tiny rate cut for the entire year of 2026. but the continued weak data we're all seeing is putting this immense pressure on them to do something more decisive to help the economy.
So that leaves us with the million-dollar question. We've got a cooling labor market, but inflation is still a worry. Is the Federal Reserve going to stick to its slow and steady plan, or will this troubling jobs data force their hand and make them cut rates sooner and more aggressively than they've let on? Thanks for watching this video overview on 15-Minute Investor.